I think there's still a bit more upside in terms of silver. I think it could go to about 19.20, so another dollar from where it is right now, more or less. And then it might pause. And this is a monthly chart. It might pause for a month or so. We might see on the daily chart 10, 15 days of sideways price action. And then we could get another big run up to about $36 change for silver. And so both of them have got quite a bit of upside potential. Silver percentage wise is obviously way more, which is why a lot of people get excited about silver. Percentage wise, it'll absolutely crush what gold does. But both of them are very bullish. When we look at the shorter term chart of gold, gold is at resistance just like silver is. So the chart's bullish. I would expect 1 to 4 week pause or pullback, which is a very good thing. And then I think we see the markets rip higher.
UBS analysts suggested that silver is a beneficiary laggard of lower interest rates from the Federal Reserve tipped for this year. They have tipped silver spot prices to hit $32 an ounce within 12 months. Analysts further suggested silver could still be cheap, though, given it's still 40% below the all-time highs of almost $48 notched way back in 2011 and out of sync with the gold price. The founder of Technical Traders Ltd, ChrisVermeulen, is optimistic about the upward potential of both silver and gold, especially emphasizing silver's expected outperformance in percentage gains. While anticipating a temporary hiccup or retracement, Chris envisions a brief interruption in the market before it continues its upward trajectory. Gold's all-time high may be getting the headlines right now, but silver also benefits from the precious metals rally, having just hit a 5-year high against the pound. In ChrisVermeulen's assessment, the outlook for silver and gold is upbeat, foreseeing ongoing bullish momentum and outlining potential price targets using Fibonacci analysis. Over the past 5 years, the price of gold has increased by approximately 65%, with a 10 to 15% gain in the last year alone. With 30-year U.S. Treasury inflation-protected securities yielding 2.2%, investors rely on gold prices rising faster than inflation over the very long term from already elevated levels. Delving into the long-term perspective, Chris highlights silver's trajectory by identifying critical levels like the COVID-19 low and historical pivot points. His analysis suggests potential prospects of surpassing $36. Now, we present the clips of ChrisVermeulen's insights from his recent interview with natural resource stocks. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Silver is definitely exciting. The silver, the miner space, it's finally coming to life. We've had this beautiful run up and this nice pause, bounce off this pink line, which is the 20-day moving average, which I find is a very powerful tool. And more or less, we've had this big move. And I like to always apply Fibonacci extension to get an idea of how much momentum something has. So I'm using Fibonacci extension, which is a pretty basic tool. We can get an idea of where silver should go. And the way this works is based on Fibonacci theory is you have your initial momentum move to the upside, and then you have some type of pullback. And if the pullback, the bull flag pattern, which is typically known as a halfway point, if that is correct, then we should see a run all the way to the 100% measured move that is equal to the first run. So that is exactly what we've seen literally as of you and I talking today. We hit that 100% measured move, 28.20, more or less for silver. Mentioning this actually earlier this morning to a few people that the precious metal space has had an awesome run. Gold has now hit its 100% measured move. Silver just hit it today. Miners are overheated. They've had a big run. They're all up into resistance areas. So while we've had a nice run and everybody's excited, a pause or pullback here for potentially a week or two is actually a very good thing. So I like silver here. Let's jump to a longer term chart. Let's go to the monthly so we can kind of step back and look at a bigger picture here. If we were to take a look at the big picture of where silver should go next, the next decent run, we can kind of pick this low here, which happens to be the COVID low. And then we've got this high. Now this is using Fibonacci extension again, Andy. And the way I use Fibonacci extension is different than a lot of other people. I only use the 618 extension and 100% measured move. And I find if price comes up to the 618 and it pauses for a bar or a couple of bars, we almost always go up and hit the 100% measured move. Now, what's interesting is, and this happens all the time in the markets, the 618 is generally going to actually fall in line with previous highs. And that also is one of the reasons why it usually has a bit of a pause at that level. I think there's still a bit more upside in terms of silver. I think it could go to about 19.20, so another dollar from where it is right now, more or less. And then it might pause. And this is a monthly chart. It might pause for a month or so. We might see on the daily chart, 10, 15 days of sideways price action. And then we could get another big run up to about $36 and change for silver, which brings us right into this pivot high where price it came up and found support here and then broke below it, hit resistance, hit resistance. So the measured moves are falling in line with really critical pivot points from back in history. Um, just to kind of bring it up, gold on the other side is showing that we should run to 2700
Go ahead and
based.
pull that up if you don't mind.
Sure. Yeah. Yeah. So if we take a look at gold with the same type of analysis here and we use Fibonacci extension, we take the low from this overall massive pattern, the high and this low, and we squish that down. It brings us up to about 2650. So somewhere in that range, gold should continue to muscle its way higher. And so both of them have got quite a bit of upside potential. Silver percentage wise is obviously way more, which is why a lot of people get excited about silver. Percentage wise, it'll absolutely crush what gold does. But both of them are very bullish. And when we look at the shorter term chart of gold, gold is at resistance just like silver is. So the chart's bullish. I would expect a 1 to 4 week pause or pullback, which is a very good thing. And then I think we see the markets rip higher. Maybe they'll just keep going higher without that pullback here. But if I would mentally be prepared for gold and silver miners to pull back and pause, just because it's nice to be mentally prepared for when it happens. So you're not like, oh no, it's topping. You'll be like, no, it's taking probably a breather.
Despite the delay in gold's surge compared to miners, Chris remains bullish on the energy sector, foreseeing a potential uptick driven by geopolitical tensions and economic cycles. He predicts a significant rally for gold, silver, and oil, supported by prevailing market trends. According to market strategists, a global economic recovery is fueling a blistering commodities rally in 2024, threatening to derail the Federal Reserve's efforts to curb inflation and potentially clouding its path to cutting interest rates by mid-year. From oil and gasoline to gold and silver, commodities started the year on a high note, with some surging to levels not seen in years. Chris further discusses the potential for gold, silver, miners, and energy prices to continue rising even if the stock market begins to decline, citing historical precedents. Gold is up 12% in 2024, outpacing the S&P 500's 10% gain. For 2024, gold is on pace to surge past the S&P 500 by the widest margin in a calendar year since 2022. That would represent a wider margin of outperformance than in 2022, the last year gold outpaced stocks. Let's get back to the interview.
Oil's on a tear. It's on its way higher. There was an early indicator telling us that oil was most likely to break out. And that was when we looked over at the energy stocks, because typically you see the energy stocks or the leverage play around a commodity break first. And of course, when we look, we saw energy stocks break out way earlier, and they've had a huge run to the upside. Oil broke out, much more delayed. And this is typically actually what we see, Andy, in the precious metal space. We generally see miners break out, and then gold kind of breaks out, and then silver catches up and rockets higher. But we're not seeing that in the precious metal space. So there's definitely a big disconnect right now in the miners and in the gold space. I think there's big institutions and countries loading up on physical gold, and it's holding its value. It's kind of changed that a little bit. But anyway, the energy space I still like. Typically we see gold and oil rally really strong near the end of a stock market, a bull market. Usually they rally very strong going into a recession. People get worried, and I believe all these things are happening. And I was listening to somebody talk about. It was a video, and I'm not a fan of all this stuff, but talking about how there's this massive war coming. I mean, I know we always have wars going, but they're saying all this stuff is coming together, and it's going to be this huge war. And of course, war means higher oil, higher gold pricing. I mean, those are like the war commodity plays. So I think we are in that perfect storm in terms of we are in a stock market, near a stock market top. We're near, I think, economic top. We got wars unfolding and things I think are going to get uglier. And this naturally, just because we're at the end of a stock market economic cycle, this is when energies and gold come to life. So there really is kind of a perfect storm kind of brewing for potentially a very big run here still in gold, silver, oil, based on just all of those things. And they're all in strong uptrends. So you definitely do not want to be betting against them. What could happen is we could actually see gold, silver, and miners and energy keep going higher. even when the stock market starts to go sideways and starts to sell off. We actually saw this in 2008. The stock market actually started going down for a couple of months. Gold, silver, and miners kept going up for a couple of months, completely bucking the trend. And when we see that, that to me is going to be like, okay, we are like weeks or a month or two away from, a major kind of meltdown in the stock market. It'll be a big red flag. So I do believe we still have a couple of months of higher gold, silver, energy pricing, even if the stock markets top out and start to sell off. And the stock market is getting overall pretty tired. The energy or the tech space is running out of steam. The NASDAQ actually gave us an exit signal last week. The SP 500 is hanging in there, but it is hanging onto a thread where the layers in the stock market, if you were to peel back just the price, there's a lot of money shifting out of the markets into defensive plays. The market here we might have that one more push and rally into May or a little bit further, but we are on the cusp of I think, exhaustion in this market. And if the market starts to go sideways or lower and precious metals and energy keep going a bit higher, that's like a huge red flag, especially for long-term investors, right? If you're in the buy and hold, you probably don't want to be holding, over the next year because we could be in a huge correction. It might take 3-5 years or longer to recover.
For long-term holders of gold and silver, everything has stayed the same. Both metals make sense to own, given our living times. Silver looks cheap relative to gold, and retail silver premiums have decreased. Now is not the time to get frustrated or fooled by silver's lagging price. Oddly, the poor man's gold will catch up. How do you foresee the ongoing commodities rally influencing your investment strategy, particularly regarding potential opportunities in gold and silver? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.